Welcome to Lesson 6. At some time or another, almost everyone in the United States has to prepare and file their tax forms. For most people, it's not really that hard, yet there are many people who make a living because you believe it's hard. Even if you do very little in preparing your taxes, you're still the person who signs them, and you are ultimately responsible for their accuracy. Regardless of who helps you, you will be the person collecting the data for them. In this lesson, we're going to review the IRS Form 1040 and remind you of the things we talked about in the last two lessons. So do you need to file your taxes in the first place? Technically, you don't need to file if you didn't have enough income to owe any taxes. However, if you didn't earn enough to have taxable income, but you know that, you've probably had to figure out what your taxable income was. So it's not that hard to take the next step by filing, because there's a good chance you could get some money back. There are three basic forms for filing your taxes, shown here. We'll take them one by one. As its name suggests, the 1040EZ form is greatly simplified, and it's for people with very simple income streams who are claiming the standard deduction. It can't be used for heads of household or people over 65. It can be used if you are claiming the earned income credit. Since deductible IRA contributions are adjustments to income, you cannot use this form if you made a deductible contribution to an IRA. IRS Form 1040A is for people with relatively uncomplicated tax situations. As such, it is designed to be used by a majority of taxpayers. It allows most types of income, most types of adjustments, and many of the usual tax credits. IRS Form 1040 is the long form that can cover all situations of personal income taxes. It can be either pretty simple or extremely complicated. You may have to use Form 1040 if your income is greater than $100,000, you plan to itemize your deductions, and you have income from sources other than wages, or if you sold capital assets of any kind for either a gain or a loss. You should be able to file a 10EZ form without any assistance. The whole intent of the form's design is to make it easy to fill out. Filing 1040A is more difficult, but is still inside the ability of most people, and that's the intent. The most significant problem is probably assuring yourself that it is okay to proceed with 1040A in the first place. Using one of the available software packages is one way to check, and certainly you can expect the national chain of taxpayer services to be competent to advise you in this area. The 1040 form may need to be used if you sold a few mutual fund shares or your house, or maybe if you feel you should be itemizing your income, or maybe you make more than the $100,000 limit. Individually, these are fairly direct, and there is little need to go up the advice ladder to an enrolled agent or a CPA. While there are a variety of technicalities that may require the use of IRA 1040, the most prevalent are the existence of some type of capital gain from the sale of something, your desire to itemize deductions, and if you have income that is not reported to the government on a W-2 form and therefore requires additional justification. Each of these situations requires its own separate form to be added or appended to your return. Capital gains are the income that you receive through the sale of some sort of property. It is the difference between the realized value and the cost basis. Realized value is usually pretty easy to calculate. It is the sale price minus the expenses of holding minus the expenses of selling. The cost of holding is an area of concern and requires good record keeping on your part. Cost basis can be a lot more challenging. It is the amount paid plus any improvements minus any depreciation taken as an expense. Now you may need to start looking for some upscale assistance in completing your tax form. In order to itemize your deductions, they must exceed the amount of the standard deduction that everybody gets. Owning a home in a state with income taxes will probably suffice. Taking a deduction for medical costs you incur has a fairly high deductible threshold. You must exceed 7% of your adjusted gross income in order to deduct these costs. If you want to maximize this, you will need to have very good records. These records should include your costs of all your doctor's visits. You can even include mileage for traveling to all of your appointments, doctors, dentists, physical therapy, all of your co-pays, prescriptions, in addition to your separate insurance premiums that you may have paid for with after-tax dollars. Taxes from state and local governments are pretty easy to identify since you usually get a bill or prepare a tax return. There are some fees that do turn out to be taxes in the eyes of the IRS, but this is state specific. Your lender will provide you with a notice of the amount of interest you have been charged on your home loans. You'll need to figure out what part is deductible. The IRS has been more aggressive lately on the documentation they require for charitable deductions, especially for in-kind donations. Be sure to read up on this if you're claiming this kind of deduction. From your personal income tax point of view, preparing a 1040 with partnership or trust information does not require any special expertise. There are some questions about passive losses that may cause you to seek the kind of help that a CPA or an enrolled agent might offer. By the way, an enrolled agent has earned the highest credential status awarded by the IRS for their experience and knowledge of tax returns. Record keeping for real property rentals, a farm, an S corporation, or business of any kind requires both expenses and income records. Again, good bookkeeping is essential to accurate tax preparation. Even if your business is quite small, it's a good idea to seek the assistance of some type of tax professional. Making your tax return correct is your job. Giving your tax preparer correct information is your job. They can only work with the information you give them after all. So, remember, regardless of who does it, you are responsible for the accuracy and timeliness of your tax filing.